Welcome back everyone, and in this video, we're going over 3 mega cap tech companies that analysts believe can climb even higher. And over the past few years, a driving force that continues to send the S&P 500 to record highs has been the performance of a few big tech names. And going forward, these companies are expected to carry the market even higher than where we are today. For example, we have news that Apple could soar 66% in a bull case scenario as it searches for a golden partnership to build electric vehicles. And we also have reports that Morgan Stanley has set a best case price target for Alphabet at over $2,400 per share, and another big tech leader in Microsoft can soar above 300 as they continue to gain cloud market share in the fast growing industry. So as a whole, some of the largest companies in the world, Apple, Google, and Microsoft still have a ton of room to grow and become bigger and badder than where they are today. And if these 3 big name companies continue to grow at such a fast rate, that will drive the entire market to record highs. And in this video, we're going to do a quick analysis into each individual company, take a look at their most recent performance, and why analysts have set such high expectations for these big tech giants over the next few years. But before we do that, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z Investor. Every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button and subscribe to the channel for daily videos. And we're going to start off by taking a look at Apple. The largest company in the world, they currently trade for $133 per share with a market cap of $2.27 trillion. Over the trailing 12 months, the company is up 65%, and over the past 5 years, the company has grown a total of 476% overall. They trade with a forward PE just above 30 and a current dividend yield at 0.6%. And we all know Apple, we all understand their business, and this company continues to perform extremely well, setting record high numbers. And analysts now have a huge bull case on the company because they have plans to get into the electric vehicle space over the next 5 years. And this ambition is heating up. We have news that they were in talks with Hyundai and Nissan on a potential partnership to develop an Apple car. And analysts are predicting that this company can surge up 66% to a price target of $225 over the next 12 to 16 months once we get an announcement on who the partnership will be with. And these bullish analysts are saying that now, with a Biden-driven green tidal wave on the horizon, it is best for Apple to dive deep into the pool on the EV front. And going forward, the electric vehicle sector is entering into a golden age with factors such as battery technologies, regulatory incentives, and tax credits, and making more affordable models create a perfect storm for demand in the EV space. And with a market that could reach over $5 trillion over the next decade, if Apple could get just 5 to 10% of the market share, it could represent another major growth category for their overall business. And right now, to capitalize on this opportunity, a golden partnership could set Apple up well for the next decade. And right now, analysts are still speculating on who they believe the deal will get done with. And some of the top contenders include Hyundai, Tesla, Ford, NIO, or even Volkswagen. And to enter into the EV space is not cheap. But of all the companies in the world, Apple is the one that has the fundamentals and the finances to do just that. Over their latest report, the company announced that they have $195 billion of cash on hand. Sitting on the balance sheet, $195 billion, that is absolutely insane. They have so much cash that they have no problem funding the new operation and the new expansion into the high growth EV market. And I'm a big bull on Apple. They are the largest position in my personal portfolio. And I agree with the Wall Street analysts that if Apple can successfully enter the EV market, it will drive the company much farther than where they are today. But Apple continues to grow even without electric vehicles. And over their latest quarter, they set a record high in revenue, surpassing $100 billion in a single quarter, bringing in a total of $111 billion in a 90-day span. That's just incredible. Revenue is up 21% year over year with $111 billion of total sales. And that's just incredible. The new iPhone 12 line completely helped drive up the total revenue, and every single business category saw double-digit growth, which is absolutely incredible. the iPhone, the services, the Macs, the iPads, and every other stream of Apple's revenue saw double-digit growth year over year, and that's just incredible to note. Apple, the largest company in the world, bringing in close to $300 billion in annual revenue, continues to grow at high double-digit rates. And their earnings absolutely crushed analyst expectations, coming in at $1.68 versus the estimate of $1.41. And my favorite part of Apple's business is the service revenue. That was up 24% year over year, and I believe that will really lead to the long-term profitability of Apple over the next decade. If we take a look, the services brought in a record high of $15.8 billion in the last 90 days. And Apple continues to expand their services to offer new products to consumers all across the world. And right now, they have more than 620 million paid subscribers across all of their platforms combined, which is absolutely incredible. Apple products are in the hands of consumers all across the globe, and their subscription-based models are only in growing popularity, which have extremely high margins, are going to lead to long-term net income growth from this big name company. And going forward, analysts have them as a buy, 11 strong buys, 20 buys, 7 holds, and 2 analysts are selling out of this company. I don't know why you would, but everyone has their own opinion. And right now, over the past 6 quarters, Apple has been absolutely crushing it, destroying earnings expectations. And going forward into 2021, we're expecting annual revenue to grow by more than 21%, followed in 2022 by more than 26% top line growth. So analysts are still very bullish on this company and are expecting mass growth for many years in the future. And if the company can successfully enter into the EV market, who knows where Apple will be over the next 3 to 5 year timeline. They are already the most valuable company in the world, and I can absolutely see Apple being worth over $3 trillion in the not too long future. And now if we take a look at the next big tech name, we of course have Google. And Morgan Stanley has set their best case price target at more than $2,400 per share. So if we take a look at the chart, the company currently trades for more than $2,100 and has grown by 38% over the trailing 12 months. And over the past 5 years, the company is up close to 200% overall. Their current market cap is $1.4 trillion, and they're trading with a forward PE just above 30. And this is a company that continues to grow even throughout the pandemic-ridden year. If we take a look, their revenue was up 23% over their latest quarter. And Google and Alphabet are the parent company of YouTube, which is a platform that is dominating the digital space with no signs of slowing down. And if we take a look at Alphabet's latest quarter, their revenue came in of over $56 billion, their earnings per share was up above $22, and YouTube ads generated close to $6.9 billion in a 90-day span. And the company's overall revenue grew 23% year over year. And there is one part of Alphabet's business that I think is going to really drive the company much further, and that is YouTube. I think YouTube is extremely undervalued when people think about Google. They think, of course, of the overall Google ad spend, which is carrying the business right now, but I think over the long term, YouTube and YouTube ads are really going to be a strong growth catalyst for the business over the next 5 to 10 years. And right now, YouTube ads brought in $6.9 billion in the fourth quarter. And that was up 46% over the same quarter last year. And going forward, I think that number will only continue to climb to record highs. As society continues to transition to a more digital age, no one's spending money on print or billboard ads anymore. And the focus is on video format because that's what retains the most users. And right now, YouTube saw a jump in viewers, and their viewers are spending more time on the platform watching more videos. And right now, what's extremely impressive is that YouTube reaches more 18 to 49-year-olds than all linear TV networks combined. All the massive TV networks aren't as large of what YouTube can produce. And their chief business officer said more than 100 million people stream YouTube from their television. So now with smart TVs, you can watch YouTube directly from your television. So there's no need for a cable subscription because you can get the same viewing experience but watch YouTube content. And right now, YouTube's going through a nice transformation period. We have the traditional YouTubers creating homemade videos, but there's also a lot of production going in to free YouTube content as well. Some big name YouTubers are spending millions of dollars per each video just to go on the platform that is free to watch. And I think as a whole, that combination of the more traditional YouTube style videos and the more professional made are going to make this platform much greater than where it is today. And if we take a look at some analyst reports, Morningstar actually estimates that Alphabet is trading slightly below the fair value for the company. Right now, trading at $2,100 is below the estimated fair value of $2,177. So buying into Google at this level may be extremely attractive because, like Warren Buffett has said, it is best to buy an excellent company at a fair price rather than a fair company at an excellent price. So getting into Google, one of the strongest companies in the world, at a fair price might be a great buying opportunity. And going forward, the company is rated as a buy. We have 15 strong buys, 25 buys, and 5 holds, and no one is selling out of this company. And going forward, their annual revenue is still expected to grow at a massive rate, up 24% in the 2021 fiscal year and up 44% by year end 2022. So we're still projecting some massive growth rates going forward from Alphabet and Google over the next few years. And in my personal opinion, I think Google is often overlooked when they don't deserve it. This is one of the strongest companies in the world. They have some of the best financial statements I've ever seen. Their growth has been accelerating, and year over year, this is a cash cow machine. And I think over the long term, they're only going to continue to grow, and every single day, people use Google products for absolutely everything. To search online, to get to different places, to make phone calls. Everything you do every single day is powered by Google in some type of way, and I think this company is often overlooked. Although they're at an all-time high, I think there is still value in this name, and they will grow to be much larger over the next few years, and I can absolutely see this company be worth over $2 to $3 trillion over the next 5+ years in the future. And now, if we continue on with the next stock in this video, we of course have Microsoft. The third big tech giant that we're going to discuss today has a new price target set at $300 per share, and that is represented by their growth in the cloud market. And taking a look at the current chart, Microsoft trades at $243, so significant upside to get to that 12-month price target level. And over the past 5 years, their share price has grown 385% overall, and the market cap for this company is at $1.85 trillion with a current dividend yield of 0.9%. And they trade with a forward PE just above 33. And all of these mega cap tech names are trading at similar valuations. Apple and Google are trading with a forward PE just around 30, and Microsoft comes in slightly higher at just above 33. So all of these companies are trading around similar metrics at this current point in time. And I own Microsoft in my personal portfolio as well, and they are my second largest holding. I own 44 shares with a market value of over $10,000, and this is a company that I have no plans on ever selling. And if we take a look at the price target, it of course was based on the fast growth of Microsoft's cloud business. And over the latest report, their Azure platform grew 50% overall, beating analyst expectations. And if we take a quick look at the numbers, over the last 90 days, revenue was up 17% year over year, and net income grew 33%. Through a year of a global pandemic, when a lot of companies had increased costs, Microsoft was actually able to grow their bottom line by 33% overall, which is absolutely incredible. And one of their platforms, LinkedIn, grew 23%, and that is a very strong social media network that is only growing in popularity. And if we take a look going forward, all of their other business segments continue to grow as well. And with the release of the new Xbox, that content revenue increased 40% year over year. And the company also announced that they returned $10 billion to shareholders over the latest quarter. In the form of share buybacks and dividends, they were able to return $10 billion of capital to their investors. That's why I love owning Microsoft stock. They reward you in not only a fast-growing dividend, but also in the form of a share buyback, making the shares that you own more valuable on the market. And overall, the long-term growth of the company is going to come from their intelligent cloud, which brought in $14.6 billion, and that was up 23% year over year, and the actual Azure platform had revenue growth of 50%, which is absolutely insane. And if we take a look at their analyst report, the company is rated as a buy, 16 strong buys, 15 buys, and 4 holds, and I would actually call this more of a strong buy rating. They've absolutely crushed the latest 6 quarters, beating earnings per share expectations each and every time, and going forward, we're expecting close to 15% revenue growth in the fiscal year of 2021 and forecasted growth of 28% by year end 2022. So overall, another company that I own in my portfolio that I plan to hold forever and think this is a name that's only going to succeed very well over the long term. So the 3 companies that we discussed today, of course, were Apple, Google, and Microsoft. These are some of the most well-known companies on the planet, some of the largest, all worth over $1 trillion. And as a whole, I think these are the names that can sustain their large market caps and continue to grow for long into the future. Their growth is not slowing down. They're all posting high double-digit revenue growth year over year. We saw Apple bring in more than $100 billion in one single quarter. We saw YouTube and Google rebound at a very fast rate. And Microsoft's cloud platform grew 50% year over year. So a ton of future growth coming from these companies. We had to talk with them today because of all those positive news headlines that I saw in the media showing a ton of future growth from these names over the next few years. So thank you for watching, everyone. I'm the Gen Z Investor, and see you in tomorrow's video.